Hello, traders. Dumelang, dumelang. Hope you guys are good. Sanbonani, Molweni, Dumilani. I hope you guys are okay. Yet another new week. Another new week. Before I go any further, let me just remind you to click the subscribe button. Try and share your thoughts and what videos we should make. So yeah, man. I'm just gonna reveal some secrets that beginners need to know to stay consistent in the market. So please watch this video until the end. But before we go there, let me just jump into today's fundamentals. You know what I'm saying? So today's fundamentals should be good. It should be good. It's gonna be a very eventful week. We all know that it's CPI week and things like that. But before you go there, let me just, oops, my internet is acting up there. Yeah, there you go. Today it's a quiet Monday, quiet Monday, 29th of July. You can see we don't have any major news. Even on Tuesday, there isn't much there. There's just preliminary CPI for Germany, and yeah. Then I think things will start warming up on Tuesday. On today, we won't have a lot of volatility in the market, right? Like we won't have the market moving much. But as the week progresses, as you can see, we have the CPI for Australia. We also have the manufacturing PMIs for China, and so on and so forth. If you want to know more about manufacturing PMIs, you can just check out a video I dropped last week. And also in Japan, they're going to be releasing the interest rate, which I believe they might increase as far as things look. They might have a second rate increase, right? But we'll see. We'll have to wait and see how that goes. As you can see, we also have CPI, and then all the way up to, you can see we also have on Thursday. I'm just rushing through, guys. There's a holiday in Switzerland on August, August the 1st, and then the official bank rate for the pound or for the UK, and so on and so forth. Like the usual, the unemployment rate on Thursday for the US dollar, and so on and so forth, right? So mostly this week it's going to be a very eventful week. It's very, very like towards the end of the week, midweek, all the way up to the weekend. We have so many news, as you can see, which provides a very good opportunity for a lot of traders to make money, right? I remember when I started making like 5 figures or whatever, I was mostly focusing on my strategy was mostly focusing on balancing your technicals and your fundamentals, and knowing what to do with the data when it comes out. You can easily take an account from 1 to 100, if you know what I'm saying. So yeah, before we waste too much time on fundamentals, all we have to do is I have to reveal those secrets that I talked to you about at the start of the video, right? I told you I was going to share some some strategies for beginners, right? So basically what you need to do as a beginner, you need to know that you can't keep on chopping and changing your strategies, right? Because as a beginner, you might get overwhelmed. You look at like maybe there are some indicators that you are using to trade, like your fibs or your fibs as in Fibonacci retracements, like your Fibonacci retracements. I guess we all know how to write retracements, Fibonacci retracements, maybe your MACD, So what a lot of people do there is when they are trading as beginners, they'll look at Fibonacci. Fibonacci's will say, your Fibs will say buy, your MACD will say sell, and maybe your RSI will say the market is just moving sideways, stay out, or it will say buy as well. And then you become what? You become conflicted as a trader to say, what do I do now? Do I buy? Do I sell? Do I stay out, or do I jump in and place a trade? As you do this, that's where now you start getting overwhelmed and start thinking, oh, I should have done this. And then the market goes against you. Then you end up, you know what I'm saying? You end up losing money. So what you need to know is, for you to stay consistent, you need to have an edge in the market. An edge in the market. What is an edge in the market? An edge in the market is something that you do consistently or repeatedly that yields positive results. If you figure out a strategy that works for you, for example, maybe it's a breakout strategy. You only trade breakouts. You trade support and resistance, supply and demand, all that into one. Like, if you just need to have something that you trade consistently over and over and over. And also, you also need to know your winning rate. Your winning rate, against, because losses will always be part of the game. That is, by now we all know that, right? Unless obviously you're a beginner and you don't know, losses will always be part of the game, but your losses should just be a fraction of a small fraction of your account, So you need to know when to cut losses. You need to know when to stay out of the market. Don't force trades, right? And the most important, the ultimate thing that you need to know is what you need to know about your psychology. It's very, very important. A lot of people know how to trade, but the problem is they can't. What's the thing? They can't. They don't have the mental metal to stay focused, and their emotional well-being is a bit shaky because they are beginners, basically. So what you need to know is, to master your trading psychology, you also need to master your risk management, right? Your risk management. You need to have risk management skills. You need to have risk management skills. You need to know, like, for example, your lot sizes. You can't be using crazy lot sizes. Try to use reasonable lot sizes, right? When you place a trade, try to use reasonable lot sizes, right? Like your risk-reward ratio of some sort. Reasonable lot sizes. Don't open too many positions. Don't open too many positions. Like, what do I mean by positions? Like, maybe you are buying, like the GBP USD is buying, right? Then you click GBP USD buy. You play another trade, GBP USD buy. Even if you use small lots, but you open so many positions, it's just like this. It's just the same as opening just one big lot, because as if the market was to turn against you, and then the screen starts being all red, like you see a sea of red, you'll be like, oh my God, I'm in trouble here. So F it, I need to close this trade. As soon as you close the trades, the market goes in your favor. How many people have had that happen? So you need to know these things, because you just need to be, that's how you stay consistent, and also you need to avoid greed. Greed is all about over trading and not having Like going, just keep going. You make $100, you want to make 200. You make 200, you want to make 500. You make 500, you want to flip it to 1,000. That's just greed. And then in the process of doing all this, chasing this, I don't know. You want to take $100 and make 2,000 in a day. Practically, it's doable, but I mean, theoretically, it's doable. Or even practically, if you know what you are doing. But you can. I always tell people, when you go to work, you can't do. You can't do your like. You can't do. You can't work. I mean, the work that you do in a month, you can't do it in one day. I don't know if that makes sense. So you do your work in bits and pieces. You go to work Monday, you push for like 5 hours, and then you go back home, you rest. The following day, you put in another 60%. Then Wednesday, you go in again. So the same thing, the same strategy, you apply it in trading, right? You go into the market, you look for opportunities. If there are no opportunities, you stay away from the market, right? If you feel there are no opportunities, you know what I mean? So greed will lead you to even blowing your account. I've had instances where I took an account from 200 to $1,800 or something. Like when I was starting, this is when I was still a beginner. Like I would take 200 and flip it to maybe $800, and then I would want to go even harder. And then in the process, you lose focus because you are tired, or you are not following your trading plan, or you are just chasing this illusion that you want to make lots of money all at once, right? So how do you avoid greed? You avoid greed by having a target, right? You should have a target. Like, for example, you can say, my target is what? If you have your like $100 account, you can say, let me have a target for maybe $30 a day. You know, if the market gives you more, then you are sorted, right? Or you know what I mean? So if you reach your target, you stay away from the market. Reach your target, you stay away. Close your trades, leave your phone or leave your laptop, go for a walk, go jogging, go cycling, go to the gym, go play golf, go do whatever, you know, to keep your mind away from trading. Because I know that as soon as you start making a lot of money, you like the adrenaline kicks in, and then you start thinking you are the best thing that has ever happened in the market. You are invincible. You're gonna make so much money. But that's not how it works. As soon as you reach your target, that is the time to stop. You know. So if the adrenaline kicks in and you just want the edge to trade wants to keep coming, just maybe go to the demo. Just go to the demo account and trade on a demo account and see what happens from there. You know. So yeah, in short, I didn't want to make this video too long. I think I can end here for today. So I'll drop another video midweek. Please check it out. Mostly this week I'm just focusing more on beginners, right? Beginners also need some love, guys. They need some motivation, because like I said, a lot of people these days know how to trade, but they don't know how to stay consistent, right? So yeah, we were all beginners at some point, and we all know that all professionals were once beginners. So yeah, man, on that note, adios amigos. Let it be a beautiful trading week for all of you. Please don't forget to subscribe to it keeps us going. Yeah, man. All the best in the new week, and yeah, I wish you more profits and a good life, in essence, right? Thank you and goodbye.